Hello. Hi all, and welcome to another edition of Midday Market Review. My name is Phil. I'll be your presenter today. This is YouTube Live, TraderCast YouTube live trading, key trading levels for some popular markets and trading setups. Very briefly, this is about me. If you are looking for a community of like-minded individuals, traders, check out TraderCast.com. If I say anything today which could be confusing for you and you need to know more, or maybe you're just brand new and you're looking for a good place to start, check out mytradingskills.com. That's where the education is. Most of these courses are actually free, so check them out and see if they're for you. I've been trading derivatives since 2004. Before that, I was trading unleveraged equities in mid to late 90s. I'm also providing trading education as a consultant, and I'm also a market analyst. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I had the privilege of teaching many people how to trade, or at least guiding them in the right way, or possibly pointing them in the right way. If they were brand new, it was a step-by-step, a logical approach to learning how to trade. If they were intermediate, maybe more experienced, they needed possibly help with risk management, position management, trading psychology, trade entries, exits, anything like that. So yeah, if you're looking for something like that, check out My Trading Skills. That's where the education is. If you're already trading and you're looking for a community of traders, check out tradercast.com. Big disclaimer, I will probably get excited a little bit later and maybe show you some live trades, talk about some key trading levels that I'm paying attention to, and these are my opinions and experiences. These are not this is not the advice for your trading and investment, because I don't have the indication of your personal objectives. Basically what I'm trying to do here is I'm trying to illustrate to maybe new people what they should be able to do, or what I would expect them to be able to do if they go through a structured approach with trading education and invest a bit of time and effort in learning how to do this properly. So not advice, opinions and experiences only. And very briefly, I have a couple of positions currently open. Actually, one is just closed now. Yesterday I was long dollar yen at 115.60. That's closed. I had my ultimate limit order at 114.80, and then kind of almost like a mental partial profit area around 115. The price came close to it, so I got out at 115.10. It didn't break through 115. It started bouncing back, so I got out of that position. I am currently long Nasdaq, and I was long Nasdaq yesterday from 15,320, 15,300, around there. I was long and I got stopped out with that trade. That was a losing trade, and then I got in again at 15,275. So I'm quite happy with that trade. I'll show you that trade a little bit later and explain the reasons why. Actually, I can do that straight away, and then we can move on to the other stuff as well. Okay, so let's go and check out a few things. Today, it's very likely that we could see a US dollar volatility. There is a specific event, there is a specific speech scheduled, an event scheduled, which could trigger the volatility in US dollar currency crosses. So if you're trading currencies, pay attention to that. If you don't know what it is, maybe this is the perfect time for you to either join a community and figure out what it is, or go to some education and figure out how news and economic data releases are moving the markets. But this is Nasdaq, and the basic premise for Nasdaq was This is a corrective pullback. This is a daily time frame. We're seeing a massive wick here. There's a massive wick and a bounce higher. From the intraday point of view, there was a flush lower and the reversal. And for those of you who watched yesterday's session, I was looking at a couple of different levels. So the first level, the key trading level, was at 15,550, which is this green line here. Then I had my resistance at 15,700, and I had a major support at 15,300, 15,330, which is this shaded area here. And the premise was that the price could either rally and sell off to this area here, so rally to 15,700 and then sell off, or continuous selling pressure from the open towards this zone and then a possible reversal. And this is basically what happened. So the reason for my first trade, which I got stopped out on, was because the price did come to that level. It started reversing a bit in shorter term, intraday shorter term a trade. We're talking about 5-minute and 15-minute time frames rather than these hourly time frames. So I decided to get in. I got stopped out on that one, and then I got in again when I saw the reversal here. So what am I doing today? The price is now coming to resistance. I'm keeping an eye on this from a fairly simplistic approach. What I would like to do is, I'm currently long. I'll assess if I see a breakout above 15,700. So if I see a rally from, let me just do it. If I see a rally and a breakout above this area here, and then a possible little retest from above, that could possibly open the way for a nice, sorry, I don't know why this is happening, but here we go, a nice spike higher towards 15,830, 15,900. So that will be quite tradable. The other setup that I'm paying attention to, which is also quite logical, could be a retest of the breakout area, so which is this yesterday key trading level 15,550. So what could possibly happen is we could see a pullback at the open, because the price is now higher than where it closed yesterday, and then a rally from there. So I would be definitely paying attention to this area here with considerable amount of interest for long setups. Again, a loss and a push below 15,550, a daily close below that level, a 4-hourly close below that level. I would walk away from that and potentially look for maybe short setups and so on. But that's where I am with Nasdaq at the moment. So either a rally, breakout and a push higher, or corrective pullback and the reversal and a move higher as well. This is the level. If I do get in here, 15,550, I would likely have my stop fairly tight. So 15,490, 15,500, 15,480, 50 to 70 point of potential risk for a potential move higher through 15,700 towards 15,830, 15,900. That's where I am with the Nasdaq at the moment. So this appears to be a little continuation pattern which is just developing at the moment. So I'll show you my open position from yesterday, and I'll explain what I did from the kind of position management point of view. I am currently long from these lows, 15,275. I'm currently long from these lows down here. My stop was initially lower, moved closer to the entry, moved at entry, moved above entry. Now I'm moving it up here, so 15,380. That's my stop currently. My limit order is up here towards 15,900. But if you remember, I would be paying attention to what happens here as well at the cluster of these previous highs, therefore horizontal 15,830 as well. Currently leaving this position open. I'm not changing it. I'm keeping it as it is. I would be paying a fairly close attention to what happens at the open. If I see a breakout and a push higher, or if I see a reversal, I would decide on what to do. But happy with this trade, either moving the stop loss higher to protect my position, or taking partial profits and then re-entering again. So that's where I am with Nasdaq, leaving that running for now. The other thing that we were talking about yesterday was S&P very briefly. If we haven't, apologies, because I'm not really sure if I was speaking about this in the community in TraderCast or during this YouTube live session. But a key trading level was at 46.66, resistance at 47.50 up here, and major support at 46.20. So from the trade setups now, this appears to be a big reversal. So what we could possibly do, using the same logic, pull back to 46.60 for another leg higher, or if I see a dip lower and a loss of 46.60 and a push lower, then that could potentially open the way for the retest of 46.20, where buyers would likely return again, because this here is a longer term major support area for S&P. Breakout above 47.50, all bets are off. We are going towards current all-time high, maybe even new all-time high as well. Let's see how the markets react, and I'll decide what to do with S&P a little bit later as well. I had another position with S&P as well. From the scalp point of view, that worked out to be quite okay. We were also talking about gold yesterday at 1790. So, if you remember, I had the 1790. I was getting ready to be in that position, and it just didn't happen for me. So maybe I was a sucker for a pip. Maybe I was waiting for too perfect entry. It came close to it. I was hesitant and so on. And now, looking in hindsight, I should have just got on 1792, 1793. And stick with it, because this looked bullish, and it was actually quite bullish. So the key level now has changed, so the level of interest is at 1800 now. So for gold bulls, pullback to 1800 and a big reversal higher from there would likely trigger some interest. In that case, stop losses would likely be around 1790 to the downside, so therefore a $10 in price for the risk. Breakouts above 1808, 1811, 1815 could open the way for a push higher towards 1825, 1834, maybe even higher. Alternatively, dip lower, loss of these 1790 area, retest from underneath would change the bullish outlook, and then the bullish setups will no longer be valid. But 1790 was a big level that played in the past, possibly could be retested. I'm looking for a bullish setup in gold, and all of this can be fairly volatile a little bit later. So I'm talking about commodities like gold, like silver, like any precious metals, and also energy, because of that event that I was mentioning earlier. So keeping an eye on gold there as well. The other thing that we were talking about yesterday was crude oil. Crude oil, I had a limit order to buy at 77. I was looking for a pullback to 77 and then a rally higher in crude oil towards 80, 80, 70, 81, 90, 82, and so on. Basically, what happened is there was a shallow pullback. It didn't really get to 77, so I didn't get filled, and this trade moved higher as well. So today, going with the same premise, I'm looking for a pullback to that breakout area 78.60 for a possible push higher towards 80.70, 81, 81.90, 82 on the upside. A dip below that level could open the way for a deeper corrective pullback and possibly retest of 77 again. So if I do decide to get in around 78.50 or 78, I would likely risk about 50 points in this trade for a potential move higher towards 80, 70. So it gives us almost, it would give me almost 200 points of potential reward for 50 point of risk. So up to 4 to 1 risk reward, would be happy with that. Keeping an eye on this, I don't have the order on this just yet, but definitely 77 would be the other level of interest. 78.50, 78, and then 77 to the downside for possible long setups in crude oil. We talked about dollar Japanese yen yesterday, so dollar Japanese yen, it's pushing higher. This was a nice bullish setup. The level of interest at the moment would be here, this previous high. Stop, if that happens, would be at 115 and take profit towards 116.30. This appears to be bullish. I'm expecting to see volatility in dollar Japanese yen a little bit later on as well. For those of you who follow news, you know there's a really, really important event which could trigger volatility in US dollar currency crosses. This also appears to be quite bullish, so we have something that looks like this. These type of patterns, they have the tendency to break to the upside if we see them in clearly defined uptrends. What they do is they tend to break out, retest, and then have a gradual move higher. People who are trading them would take the widest point of the consolidation, extended. This gives them a target. This is previous swing high. All kind of ties in quite nicely to what it is as well. So no position in dollar yen just yet, but it does appear to be bullish, and it could possibly become quite volatile a little bit later. I was mentioning something else as well. I was mentioning sterling Japanese yen as well yesterday. That looking at sterling yen, this is nice and bullish. From the 4-hourly point of view, this is consolidating. From the hourly point of view, it's potentially coming to that level of interest, and the level of interest was at 157. So the breakout above 157 would open the way for a push higher. So let me just show you what I mean by that. Above 157 we could see something like this develops, and then a potential little retest. So from my point of interest, 157 is the key trading level. This is the support, 156.50. So that's my support. So that's basically the an element of risk that could possibly be taken, and then this here, let's paint it green, not lime green, for the potential entry, and if this does play out, then this could be quite nice and volatile to the upside towards 157.80, 158, and so on, from the breakout point of view. Dip lower, loss of these lows at 156.50 would negate it, potentially changing it altogether. Yet again, something that I'm paying attention to at the moment. This is all very, very fast at the moment, and hopefully I am covering few things that could be of interest to you. I'll be talking about euro dollar, sterling dollar. I'll be talking about silver. I'll be talking about other things in the community. Oh, by the way, I think we talked about sterling, not sterling, FTSE yesterday as well. Just wanted to show you what's happening with that. If you remember, I was looking at this area here, 7,400. So, and I was looking for a possible pullback and then a rally from there towards 75.50. And loss of 7,400 would then negate this type of setup and potentially dip lower. So I was saying 50 points of risk to the downside for potentially up to 150 points of potential gain, 3-to-1 risk to reward ratio. The price came close to it, not exactly, but close to it, and I didn't get filled on this. I had a limit order on this. Now I'm looking at this setup from this point of view. This is the coiling price action. Potentially, this indicates an energy build-up. 1, 2, 3 touches. 1, 2, 3 touches. Nobody's winning. Bulls and bears are fighting here. They're exchanging trades. Nobody's winning. This normally precedes explosive reaction. Breakout to the upside could possibly target 75.50, 7,600. Reversal at this level and a big selling pressure, initially supported 74.40 and then 7,400, where I would still be a buyer. I would still be a buyer for a bounce higher. That's with FTSE. I'll be talking about a few other things in the community later, and hopefully this is all informative and beneficial. So far, I have few orders. I only have one open position at the moment, which is Nasdaq, and I'll just show you that again very, very quickly, because I know some people are probably joining us late. I'm currently long. My stop is above entry. I'm looking for a breakout and continuation towards 15,800, 15,830, cluster of these highs from 7th of January, breakout above that level, 15,900. Loss of these lows down here, 15,570. I would likely close my position or a part of my position and move the stop loss to protect myself, because this can reverse, and I don't want to give all the unrealized profits back to missed market. Thank you for watching. Thank you for listening. Stay safe. Hopefully this is informative for you. If you're looking for more information, come and find out more at mytradingskills.com or TraderCast. Thank you for watching. Thank you for listening. Stay safe. Bye for now.